What is happening, tech and finance fans? Get ready for a rapid-fire update that's going to blow your mind. The news cycle is moving at warp speed, and if you're not plugged in, you're missing out. We've got the inside scoop on market-moving intel that could redefine your strategy. From the boardroom to the blockchain, we're bringing you the stories that matter, the ones that are shaping the future right before our eyes. Stay locked in, because what's coming next is unmissable. First up, we're diving deep into the financial arena, dissecting a major player's performance and what the charts are telling us. Is it a buy, a sell, or a hold? We've got the breakdown. Then, we're celebrating a true titan of industry, looking back at an incredible life and career that has inspired millions. Get ready for a journey through decades of wisdom and success. After that, we're scrutinizing a key player in the financial software space, asking if the market is missing a crucial opportunity. The numbers are in, and they might just surprise you. And finally, we're hitting the gridiron for a stunning sports upset that has everyone talking. Get the full story as we break down the game-changing plays and the road ahead. You don't want to miss a single second of this. Make sure you hit that subscribe button, ring the notification bell, and let's get started. Mixed signals for Oracle, a deep dive into technicals and fundamentals. This stock is showing a fascinating dichotomy, with technical indicators flashing mixed signals while underlying fundamentals remain robust. What does this mean for investors navigating today's choppy market? In the fast-paced world of stock analysis, understanding the intricate dance between technical chart patterns and the bedrock of a company's financial health is crucial. Oracle, a titan in the technology sector, is currently presenting a complex picture that demands a closer look. While the market often reacts to short-term fluctuations, a comprehensive analysis reveals that the company's fundamental strength remains a compelling factor. This situation raises a critical question for investors. Can strong fundamentals overcome potentially volatile technical signals, or does the market's current sentiment dictate a more cautious approach? We're exploring the nuances of Oracle's performance, examining the specific technical indicators that are creating this mixed outlook. Are certain patterns suggesting a potential downturn, or are they simply noise in a broader upward trend? Simultaneously, we're dissecting the core financial statements, revenue streams, profitability metrics, and growth strategies that underpin Oracle's business. The company's ability to generate revenue, manage costs, and invest in future innovation provides a critical backdrop against which the technical signals must be weighed. This deep dive aims to provide clarity for those looking to make informed decisions in a market that rewards both agility and a solid understanding of intrinsic value. The interplay between these two analytical approaches is what often separates successful long-term investing from short-term speculation. Oracle's current market position offers a compelling case study in this dynamic, and we're here to unpack it all, providing you with the insights you need to navigate these complex waters. Analysts and investors are keenly watching to see if Oracle's solid financial footing will ultimately dictate its trajectory, or if the current technical patterns will lead the market's immediate sentiment. But is this the only major financial story making waves? Hold on, because we're about to shift gears to a story about a true legend. Stay with us. The Oracle of Omaha at 95, a lifetime of investment wisdom. As a legendary investor reaches a significant milestone, we look back at the defining moments that shaped his unparalleled career. This week marks a momentous occasion as Warren Buffett, the universally recognized Oracle of Omaha, celebrates his 95th birthday. This milestone is particularly poignant as it occurs during his final year as the CEO of Berkshire Hathaway, Inc., a conglomerate he has steered to extraordinary success for decades. Buffett's journey is not just a story of accumulating wealth. It's a masterclass in value investing, patience, and long-term vision. To honor his incredible legacy and the profound impact he's had on the world of finance, we're taking a trip down memory lane, highlighting a significant achievement or lesson from each decade of his remarkable life. From his humble beginnings in Omaha, Nebraska, where his father's stockbroking career ignited his early interest, to his first stock purchase at the tender age of 11. 3 shares of Citi's service preferred that he famously bought at $38, saw drop to $27, and later sold at $40 for a profit, only to watch them soar to $200. Buffett's early experiences laid the groundwork for his enduring investment philosophy. His decision to live in the same Omaha home since 1958, purchased for $31,500, over $355,000 today, speaks volumes about his grounded approach. The 1960s saw him take control of Berkshire Hathaway, a textile company he would transform into an investment powerhouse. By the 1970s, his annual letters to shareholders became essential reading, offering not just financial insights, but life lessons. The 1980s were marked by his strategic accumulation of Coca-Cola shares, a decision that has yielded billions. The 1990s saw him fully acquire Geico Insurance, a company he had invested in since 1951, further solidifying Berkshire's insurance empire. The 2000s brought unprecedented wealth, with Forbes naming him the richest man in the world in 2008, surpassing Bill Gates, and he made a significant pledge to donate the majority of his wealth. In the 2010s, his embrace of Apple, calling it probably the best business I know in the world, transformed Berkshire's portfolio, making Apple its largest holding. Even in 2020, his decision to sell airline stocks at a loss, citing the pandemic's impact, underscored his pragmatic approach. Buffett's life is a testament to the power of compounding, disciplined investing, and unwavering integrity. This retrospective offers invaluable lessons for investors at every level, showcasing a career defined by astute decision-making and a commitment to long-term value. From the life of an investing titan, we now turn our attention to a company's current financial health. Could the market be overlooking a hidden gem? Let's find out. Oracle Financial Services Software. Is the market missing a key opportunity? Despite a recent dip in its stock price, this financial software provider shows strong underlying metrics that warrant a closer look. In the dynamic world of financial technology, companies that provide essential services to the banking and investment sectors often operate behind the scenes, yet play a critical role in the global economy. Oracle Financial Services Software Limited, OFSS, is one such entity, currently presenting a puzzling scenario for market observers. While its stock has experienced a modest decline of 3.8% over the past week, suggesting a degree of investor skepticism or broader market headwinds, a deeper dive into its financial performance reveals a more optimistic picture, particularly concerning its return on equity, ROE. The market's reaction, at first glance, might seem justified by short-term price movements, but a more thorough examination of OFSS's fundamentals, especially its profitability and how it utilizes shareholder capital, suggests that the current valuation might not fully reflect its intrinsic value. We are focusing on OFSS's ROE, a key metric that measures how effectively a company reinvests its shareholders' capital to generate profits. For OFSS, the trailing 12 months to June 2025 show an impressive ROE of 36%, calculated from a net profit of Rupee 24 billion against shareholders' equity of 68 billion. This figure is not only robust, but significantly outperforms the industry average ROE of 13%, indicating that OFSS is generating substantial returns on the capital entrusted to it by its investors. This high ROE is particularly noteworthy given the company's payout ratio. OFSS maintains a high 3-year median payout ratio of 92%, meaning it returns a significant portion of its earnings to shareholders, retaining only about 7.7% for reinvestment. Historically, companies with high ROE and high profit retention are often poised for significant growth. However, OFSS's moderate net income growth of 8.5% over the past 5 years, while respectable, lags behind the industry's average growth rate of 19% during the same period. This discrepancy raises questions about whether the company is reinvesting its profits effectively enough to capitalize on its high ROE. Despite this, OFSS has a consistent track record of paying dividends for over a decade, signaling a commitment to shareholder returns. The latest analyst forecasts suggest continued earnings expansion, which, if realized, could provide a tailwind for the stock. The market's current pricing of OFSS may be heavily influenced by the lower earnings growth compared to the industry, potentially overshadowing its superior ROE and dividend history. This creates a scenario where the stock could be undervalued if the company can leverage its strong profitability to accelerate future growth, or if the market sentiment proves overly cautious. This analysis highlights the potential disconnect between OFSS's strong profitability metrics and its recent stock performance, prompting a discussion about market efficiency and investor perception. From the world of financial software and market valuations, we're now switching gears to the electrifying atmosphere of competitive sports. Get ready for a game that delivered a knockout performance. Gridiron dominance, Tech handles Cumberland in a one-sided affair. A commanding performance sees the home team secure a decisive victory, showcasing offensive firepower and defensive resilience. The 2025 season for the Tennessee Tech Golden Eagles football team has officially kicked off with a resounding statement, a dominant 65-0 shutout victory over the Cumberland Phoenix. This opening game wasn't just a win. It was a display of overwhelming strength on both sides of the ball, setting a high bar for the season ahead. From the initial moments of the first quarter, the Golden Eagles asserted their authority. Senior quarterback Kekoa Visperas connected with senior running back Torrin Baker for the game's opening touchdown, signaling the start of a scoring onslaught. Shortly after, senior running back Quintel Quinn extended their lead with a crucial touchdown run, pushing the score to a commanding 14-0. The offensive momentum continued as senior wide receiver Tremel Jones executed a pivotal long punt return, setting up another scoring opportunity. Visperas then found sophomore running back Aiden Littles for a touchdown pass, further solidifying their control. Visperas, a new addition to the Golden Eagles roster, impressed in his debut, earning praise from head coach Bobby Wilder, who noted his consistent performance throughout the summer. Coach Wilder specifically lauded the offensive line's exceptional play, highlighting their effectiveness in establishing the passing game early on. Kekoa Visperas, he's been playing like that throughout the summer, Wilder commented. The offensive line was very good today. We intentionally came out in the first half and wanted to throw the ball to establish the passing game. The special teams unit also shone brightly, with both Tremel Jones and junior wide receiver Tree Holloway making significant contributions in the punt return game. Coach Wilder emphasized the strength of the punt return unit, stating, "Special teams, particularly our punt return game, was very good today." Defensively, the Golden Eagles were equally dominant, pitching a shutout and holding the Cumberland Phoenix to under 100 total yards, a testament to their formidable performance. This defensive mastery was achieved largely in the absence of key players, including team captain and FCS preseason All-American safety Tim Koutras, who was ejected in the first quarter for targeting and forced to sit out the remainder of the game. Additionally, senior defensive end Hudson Tucker did not participate in the game and was observed on the sidelines in street clothes, his current status remaining uncertain. Looking ahead, the Golden Eagles are set to host UT Chattanooga in their next matchup, aiming to maintain their undefeated streak and start the season 2-0. Conference play is slated to begin on September 27th against TSU in Nashville, where they will look to carry this momentum into their league schedule. This decisive victory underscores the Golden Eagles' preparedness and potential, leaving fans eager to see how they will perform in upcoming conference matchups. What an incredible display of athletic prowess! But our coverage doesn't stop here. We've got a quick recap of all today's top stories coming right up. And that's a wrap on today's essential updates. We saw Oracle's mixed signals, celebrated Warren Buffett's 95 years of wisdom, questioned if the market is undervaluing Oracle Financial Services software, and witnessed a dominant football performance. Don't miss out on future insights. Hit that like button if you found this valuable. Subscribe to Microsoft Sphere for your daily dose of market intelligence. Ring that notification bell so you're always in the loop. Drop a comment below with your thoughts, and follow us on all social platforms to stay connected. We'll see you next time.